It is March 6th. Let's go ahead and get today started.
Welcome to the show, it's Mortgage Talk. Grab a coffee, sit, and let's unlock the dreams you've got, the place you crave. From the front porch swing to the hidden cave. Talk about your home, talk about your plan, talk about the future where you'll stand. Your mortgage, your dream, your story to give. Let's talk about the place where you wanna live. Got questions? Here's the place to be. A TikTok Live Mortgage Jubilee. Fix or float, we'll break it down. From city lights to your small town.
Happy Friday, happy early weekend. It's almost 5 o'clock on Friday in the Central Time Zone. So I hope you guys are having as good of a day as I am. How was your week? And hopefully we're having a good jump into the weekend here. So thank you for joining. My name is Kenny Murden. I am newer to TikTok. I'm not new to lending. I've been lending since 1999. And in that time, I've been a good resource for real estate agents and loan officers to help them structure some more complicated deals that they run across. And that makes me well qualified to answer any questions that you might have about mortgage or real estate in general. So feel free to follow along. If you like the content, like it. If you know anybody interested in buying or refinancing in the near future, please share this with them. I should probably hit my own share button. I don't do that. Again, newer to TikTok, so I don't how do I TikTok? I don't know. I hit the button. Did that work? Who knows? Anyway, so just kind of figuring out how that stuff goes there. But as you saw me typing here behind me, I price out the same deal at the start of every show. And I can price out any loan scenario for you live here on TikTok right now without having to wait, without having to apply and do all that kind of stuff. Now, if you do want a detailed written quote, simply text me to the number above, screenshot this. You can, save it for later. But if you text me, I'll be able to get an actual loan application link out to you. It takes a few minutes to apply. And I can get you pre-approved for a purchase on the same day. It only takes about 20 minutes as long as I have the documents that I request. But with that, let's take a look at pricing. So I look at the same scenario every day to see if rates are getting better, if they're getting worse, and then we can talk about what that means for us. So I'm doing a $400,000 purchase here in the state of Texas and 3.5% down with a 680 credit score, which is kind of middle of the road credit, not great, not bad. And so today, to get under that half of a point that I like to be in to quote, we're actually having to move the rate up to 5.375, where yesterday we were looking at 5.25. So again, as we're watching this 10-year yield where it just jumped dramatically here, what's going on, right? So again, the old expectation when there's conflicts like war happening, then that would typically bring rates lower because rates are typically lowered because people are going to buy bonds, U.S. Treasuries, which then a higher bond brings a lower yield. And that's what I'm following here with the yield, where luckily we're seeing a little red there. That's a good thing, good indication for tomorrow, which would be Monday. But yeah, it just spiked way up here. I'll zoom in. It's going the wrong way. Why is it going the wrong way? Well, the best opinion that I heard on this is because the conflict is going on that's restricting oil. The price of oil has gone way up. If we go into U.S. markets, and let's take a look at commodities, as this is loading up here. Looking at the NASDAQ and the Dow had another really bad day, as they did yesterday as well. You know, the joke that I really enjoyed, I don't know if you guys remember when Pam Bondi was talking about the Dow Jones is over 50,000, so who cares about what happened on Epstein Island or whatever. It's no longer 50,000, so maybe now they can jump into action. You know, if 50,000 was like safeguard for not going after pedophiles, then it's not 50,000, so maybe they're not safe. Who knows? I don't know the rules there. But if I scroll down to what is going on with oil, natural gas, where did I see? I don't know, maybe they don't have it pulled up on the ready, but basically oil is going up, which spurs the fear of inflation. And if inflation's going higher, interest rates, that's like the thought process that goes into it. That was a pretty good explanation. Like, I can buy into that. But for whatever reason, U.S. Treasuries are no longer a risk-off asset. And what I mean by that is it used to be where people would go into the stock market, they'd be risk on, or like they want to take risk. And then if things got shaky, like right now, if you look at this VIX here, the bottom line, the VIX being over 20 is considered bearish, meaning stocks are going to go down. And right now it's at 29.49. That's really bad news for the market, you know, in the near term. And we can see that's just going straight up going that way, if I'm looking at the camera here. So yeah, we're seeing a spike in the volatility index, also known as the VIX. And so that means we're likely to see continued decline in the stock market. We're likely to see an increase in interest rates. So if you have a need to buy or refinance in the short term, I would suggest locking in your interest rate as soon as possible, especially if you're within 30 days of closing. Because, I mean, it doesn't mean just because the VIX is up, doesn't mean it's always going to go up. The markets go up and down. Just like things are kind of heating up. We've seen this with tariffs, where it's like, oh, the pressure is on, and the tariffs are causing more news, more angst in the market, and then all of a sudden something will happen to relieve that pressure, and then the markets will respond in kind. So just because it's bad right now doesn't mean it's going to continue to be bad permanently. The markets never move in one direction for very long before they have something that turns them around. But right now, that just looks really, really bad with the VIX going up. So none of this is financial advice, right? It's just for entertainment purposes only. I can't give financial advice. I'm just looking at what the markets are doing, and I follow the news only for its impact on interest rates is all I really care about. And so I don't really get into the weeds on, you know, what's happening in geopolitical, whatever. I really don't care about that. But how does that relate to interest rates? Right now, interest rates were phenomenal literally 1 week ago today, and then this last week with this war in Iran, as we can see here, and I'll scroll in again, this mostly correlates with how interest rates are moving. They just got really nasty this last week. Just a huge movement in the wrong direction. So that's what our interest rates are doing. Again, for those of you that are scrolling past, my name is Kenny Murden. I'm newer to TikTok, not newer to lending. been lending since 1999. In that time, I have been able to help real estate agents and loan officers structure some of the more complex deals. I'm able to help people that might not otherwise qualify, kind of thread the needle into an approval. And that's a little bit more about what I wanted to talk to you about today. I wanted to talk a little bit about manual underwriting. What is it? Let's talk about it. Let's get into it. So typically what'll happen is you'll apply for a loan and we will run what we call AUS, automated underwriting system. And so what that'll do is take your information. If you're familiar with AI, you can kind of put in a whole bunch of complicated information and it spits out some data. That's kind of what we've been using for years and years. Fannie Mae has their automated system and Freddie Mac has theirs. That's the bulk of what we use. And the computer usually, will take your information and it'll say yes, but for these things. And we call those conditions to lend, right? So it might say, this looks like we can approve it, but we just need to verify X, Y, and Z. Sometimes it comes out and says you're not approved, right? It looks like a denial. But as a loan originator, I know if certain metrics are there, like if your credit score is good enough, if I have just the certain underpinnings of an approval, I can take that automated denial and throw it out the window because I know I'll be able to overcome it on the substance. And we're able to do a manual underwrite to say, okay, well, we can still prove these things and we don't need to rely on that automated system. And so it's typically a little bit more of a tenuous process where I'll be, working with you a little bit more hand in hand. We might add a few more letters of explanation to the underwriter or what have you, but we can still overcome a denial in many cases with a manual underwrite. So that's where having a loan originator that has a little bit more experience comes in handy. And it's not even necessarily that experience means a whole lot right now in the world of AI. I've been actually finding newer loan originators coming up with phenomenal solutions. There was one recently where she came up with a solution that I honestly was impressed with. I didn't think of it because I got pigeonholed into the application was for a fix and hold loan, right? And so I was thinking very narrowly about that loan program. But what we ended up doing on the advice of AI was to get a bridge loan instead of a fix and hold loan. So what was applying for the fix and hold loan did not apply to the bridge loan, but ultimately the bridge loan got the applicant what they wanted better than what the fix and hold loan would have been. So I'm impressed with even the newer loan originators that are using AI to overcome those more complex issues. But ultimately, at the end of the day, that's what we do. We want to find out what the goal is. If you have just a simple goal of, I want to refinance, I have a 7% interest rate and I want 5.5, or whatever we can get, then that's a pretty simple solution, right? And we don't need to bang our heads against the desk to come up with a solution there. We can just kind of say, all right, awesome. We're just looking at the amount of savings. What are the costs? What is the savings? What's the break-even point? I like to see a break-even point as soon as possible. And what that means is to keep the loan costs as low as possible, even if it means the rate be a little bit higher, where typically people are thinking they want to have the lowest interest rate. That's not always the best option, because if you think about it this way, if you have a really low interest rate, but you have a lot of cost to get that, let's say it costs you $10,000 to have $500 in savings. How many $500 of savings does it take to get that $10,000 of cost to break even? And if you don't get there, but instead you have to refinance again or sell the property, you never get to savings, then it wasn't worth it. So if those things that you might not even be aware of, maybe there's a job change, maybe there's, some people move for different reasons, right? But if you have to, for whatever reason, pay off that loan and you never got to the savings portion of lowering that interest rate by adding cost, then it's a whole bunch of savings that was never realized. So that's why my personal opinion tends to be where we will have lower cost, even if it means the interest rate's just a little bit higher. And so that's something that I typically will counsel people on. But I see, a few of you are kind of filtering through here. Again, my name is Kenny Murden, newer to TikTok, not newer to lending. I'm able to price out any loan deals you have right here on TikTok Live. Brittany was asking, what is a decent interest rate? It depends on what kind of loan we're looking at. So at the start of the show, I always price out this scenario where it's a FHA purchase, because I run into this scenario a lot here in Texas. It's a $400,000 purchase, 680 credit score. And so we were looking at today was a little bit higher than yesterday and the day before, but we're looking at 5.375 interest rate. And the cost of that is about a quarter point. What is a point? A point is 1% of the loan amount. So if I take the handy dandy calculator, and if we take a $400,000 loan and we get to 25% of it, should be $1,000. Divided by 100 is $1,000 in lender cost to get that 5.375 rate. Now, if we wanted to get a lower rate, we would raise the cost, or if we wanted less cost, where we could even get a credit against the cost of the loan, then we could raise the interest rate. But the rate here that I would be quoting most people, I would start at the 5.375. And then if your rate is much higher than that, you might want to consider a refinance to save some money. Or if you're looking to purchase, obviously, then it's not so much dependent on what rates are doing. You need housing, right? So then it's just kind of, get the best deal you can get if and when you can get it. And then what we were talking about in addition to that is what have rates been doing? They dipped way down up to last week. And then this week they went the wrong way. So that's a little bit of what rates are doing. And I'm talking a little bit about why it's going on that way. Because typically things like war in the Middle East or anywhere, typically that results in lower interest rates. But what I've been remarking on this channel for a while now is interest rates that used to be a safe haven asset where people would buy bonds, well, not necessarily people, but like countries and institutions, institutional lending, different things would buy bonds that would make the yield lower and interest rates would be lower at times of uncertainty like right now. That's no longer the case. And I was notating that recently as we were seeing the spike in gold and silver and some commodities. Right now, the commodity that's going up is oil because of the war going on over there. The ships can't get through the whatever sea. I don't follow geopolitics. I just care about interest rates and how I can best serve you as somebody that might need to save money by refinancing or might want to buy a house. That's my main goal. But what's happening is oil prices are increasing. The perception of that is that will lead into inflation, making other products more expensive. And that's why interest rates are going up. That's kind of what I've been hearing. But for whatever reason, this is no longer a safe haven Oh, thank you very much for the follow. Actually, I'm like just a couple follows away from 2,000. So if I get a couple more follows here, I'll be sure to follow up with a thank you video, as I'm a newer micro whatever content creator, whatever you call people that go on frequently. And so I'm kind of proud of the metrics. Thank you, Brittany, very much. And so I'm kind of proud of the little metrics as I get these likes and the follows and all that kind of stuff. It just kind of keeps me going. As do the comments. I love if people have questions or comments about real estate or mortgages in general. Like I said, I can price out their different loan scenarios right here, live on TikTok. And then other than that, sometimes people have questions about, buying a home, whether it's for the purpose of investment or a place that you want to, have for yourself. Let's see. What are your thoughts on putting more than 20% down? I would actually not. And here's why. I don't think this is not financial advice. It's my opinion only, for entertainment purposes only. My view is that real estate as an asset class is not going to increase in value in the next 10 years the way it increased in the last 10 years. Total guess, right? But that's just my personal guess. So if I'm looking at putting cash into an asset class, whether it's real estate or something else, I'm looking at something else more closely than real estate. And some of the things that I'm looking at range from, well, I know the real estate business really well. So the two big lenders that are kind of duking it out in the mortgage world are UWM and Rocket. And I'm looking at both of their stock prices now, and I'm like, oh my gosh, ridiculous buying opportunity. As there are so many other stocks. So I'm looking at stocks as one place I'm looking. I'm also looking at, I trade in crypto. So, I'm like Bitcoin right now is phenomenally cheap. And I saw, I'm in that algorithm. So I'm looking at, somebody made an argument that Ethereum, and I don't own any Ethereum, but they were making the argument that Ethereum is like the best buying opportunity in over a year, based on whatever algorithm that they had that produces a blue dot at the beginning of every big run up or whatever. Again, not financial advice at all, entertainment purposes only. But I would be more interested in those asset classes rather than put a whole bunch more money down into real estate if I didn't have to. So, but for, if you don't have an idea of another asset class that you'd want to put your money into, the old adage is as safe as housing. So it's a safe place to store your money. I would say it's better than a savings account that's paying you very, very little interest. At least housing will keep up with inflation. The two things that will impact housing prices overall on the macro scale are going to be the median income wages and interest rates. If interest rates go down, that's going to be good for home values going up. And then also, if the median income goes up, that'll also lift up the value of real estate on the whole. But another thing to look at legislatively, and I don't know if this is like a law that's passed, but I heard that, they waved a wand in the White House to say that the large institutional money can no longer buy single family homes. That's fantastic news for the younger generation trying to break into the housing market. It's a shame that the median age for a first-time home buyer is 40 years old. That is way too high. So it's good news for the younger generation to make it more affordable to get into the housing market by having, to disallow these institutions from buying up a lot of single family homes like they have been. But what is that going to do to home values? The home values will come down with fewer buyers. So that's just something to kind of keep an eye on. Where's the best placement of your dollar? So I would just say, even though I can't give financial advice, might be worthwhile to pursue somebody that can to help you, or if you just pursue it on your own to find a better place for that dollar than paying down a loan. Loans are tax advantaged. I don't know if you just take the standard deduction or if you itemize your deductions, but if you itemize, again, I can't give tax advice either, for entertainment purposes only, but if you itemize your taxes, then the deduction on your mortgage makes it a little less consequential to have your money being loaned on the property versus invested somewhere else. My personal opinion is, again, I want to put my personal dollars in a different asset class. I know there's a lot of people in my industry that lend and that are real estate agents that it's in their best interest to say definitely everybody should own. I am somebody that frequently voices caution when I would say renting makes sense if you don't have a long-term plan to stay in the house that you're buying. I'd say if you don't know for certain that you're going to be there for the next 3 years, that I would strongly, guide you towards renting. But if you know you want to stay somewhere that 3 years or longer, now you have a really good chance to have a foothold to gain some equity. But the example that I gave the other day was, if you bought a house for $100,000 and it went up to $110,000 in value, to the average person, they might think that they just gained $10,000 in equity. But that's not true. If you have that same gain and then you went to sell that property, you might have to pay $6,000 or 6% of that value, where then I did for quick math, that you'd have only gained $4,000, but at 110 times 0.06, you're actually paying $6,600 minus 110. So you're really only gaining $3,400 when it went up in 10,000. But anyway, that's basically a hidden cost to homeownership, is the cost to have to sell the house in order to gain the net difference on where you bought it to where you sell it. But if you're holding it for a long time, like I say, at least 3 years, there's a good chance you're going to gain some equity. And so I'm not saying don't buy. Buying obviously has other benefits that go along with it. A lot of times renters get frustrated because they can't have a certain dog or a certain pet, or some places say no pets at all. Some say, oh no, you can't make this change or that change. Or like for me, I have a hydro massage bed that I start and end most of my days on because I'm old and my back hurts, right? But it requires a certain plug to go into the wall. Well, if I go and rent someplace, they might not let me do that. They might say, oh, it's a risk to have that thing in there with, what if the water leaks? Or we don't want to allow you to use a plug that's going to make it run, right? So if they have restrictions for the use of the property, you don't have those restrictions if you own it. If you own it, do whatever you want, it's yours. But those are some things, some factors to think about. Is owning a luxury, or is it a necessity, versus is it a benefit to renting someplace? Now, if you're going to buy someplace and you're going to live there for 10 or 20 years, I think you'd be hard pressed to find an argument for renting a place for that same amount of time, because of the appreciation that you will likely get in real estate. So those are just some of my thoughts on that. But as I see a few more of you kind of tuning in, I can price out any loan scenarios if you're wondering about what do your home pricing interest rates look like for your specific situation. At the beginning of every show, I always price out the same scenario: a $400,000 purchase here in Texas with a 680 credit score, 3.5% down payment. And today we were looking at 5.375 in rate with a little less than a quarter point, which is about $1,000 worth of lender fees for that rate. And we were talking a little bit about that is showing that our pricing is getting worse over the last week, where literally 1 week ago, if I move my head out of the way, 1 week ago is at the bottom of this this chart here, and then this last week it just shot straight up from the fears of inflation with the turmoil in the Middle East. Question is, let's see, have you used STG? Thinking of using them for a client? I have not, but I know what you're talking about there, because they're always right here. Oh, you can't see my mouse, but if I use my finger, they're right here and here. Very high up on Loan Sifter. I have not used them. I've not used Florida Capital, which is at the top of Loan Sifter for this scenario. I know CMG is oftentimes way up there. I have used them. I have a deal with them right now, and they are slow as molasses in underwriting. So as long as you don't need to close quickly, you can use them, but use caution. As far as who else is on the top here, Nations Direct has been good. Jet Mortgage is good. Loan United is phenomenal. I really like Loan United. NMSI, really good. The lender, I've not had good experience with them. EPM was really, really slow from, I'd say, a few months ago to about the last year. But I've been hearing enough good things about EPM to now I'll consider using them again. But man, the last one I had with them a long time ago really turned me off, because it was like 9 business days in initial underwrite review. So, and for those of you that don't know what Josh and I are talking about there, as far as our experience using these different lenders, is we're looking at 2 things. We want to get you the cheapest price, but we want to give you the best experience in underwriting. We don't want to hate each other by the closing table. We want to be friends, and we want to be referable to your friends and your family members to say, we had a good experience working with Kenny or working with Josh. See, Josh says, Town is my solid partner. I've used the lender, but only for non-QM. And so for those that you don't know, non-QM might be something like a loan where you can't necessarily show your income to qualify. You might need to show bank statements, show the deposits of your bank statements to calculate your income, or no income verification at all, or some of those types of loans. You might have heard of DSCR, where you're using the rental income to buy a rental property and not have to prove your own income. So that's a little bit of what non-QM means, where QM would be the loans that you might be more familiar with for yourself, whether it's a conventional loan, FHA, VA, USDA, those types of loans. And so that's where, when I pull this up and I'm saying we can price your deal out live on TikTok, what I mean is we're able to show you there's a lot of different loan programs to choose from. So people will oftentimes come in and comment that they're wondering what rates are for, maybe they're looking for a 10-year loan versus a 30-year loan, or whatever it might be. And again, the shorter the term, usually it's the lower the interest rate. But I caution where I would rather, like my opinion, again, I can't give financial advice, but I can give my opinion for entertainment purposes only, is I would have the smallest payment possible, and, you know, lean on the mortgage to have the smallest payment possible so you can put more dollars in a different asset class. Just because my opinion is that real estate is not going to do in the next 10 years what it did in the last 10 years. And that's just entertainment purpose only, just a total guess. But that is a strong personal opinion of mine. But for those of you that are filtering through, hi, my name is Kenny. I am newer to TikTok, not newer to lending. I have helped a lot of loan officers and real estate agents structure some more complicated deals, especially when I was a sales manager in a call center and helping people just with phenomenal. I was like basically doing triage. There were just piles of the, you know, the hardest deals that I've ever looked at, and try to figure out, can this be approved? Can we maybe look at it a different way to get it done? Cutting my teeth in that circumstance is what made me really well qualified to answer any questions that you might have. So feel free to ask any questions or any comments about real estate or mortgage. I also, over the years, have purchased several homes myself, whether it was to rent out or to live. We've done Airbnb as well, where we started off with more of a traditional, traditional rental, long-term rent type of investing. And we learned to really enjoy renting out Airbnb. One, you get to use the property. You might buy a place that's a little bit more vacation type, enjoyable, waterfront. Have it set up your own way with an owner's closet. There's a lot of enjoyment that way. And also, when people stay a very short amount of time, they don't tend to do a lot of damage to the property. Whereas if they stay for, several years, by the time you get the property back and you have to get it ready for the next tenant, trashed is an adjective that I would use to describe some of the ways that we've found properties. Whereas, they're both profitable, right? In the long term, like, again, where I'm saying, if you buy real estate and you're going to hold it long term, generally you're going to do well that way. And being able to use a mortgage to leverage the amount of real estate that you're able to buy, makes it easy as a way to get into, some kind of investing. And I don't want to sound like I would, where I favor other asset classes. It doesn't mean that I don't think highly of real estate overall. I think it's a fine thing to have in your portfolio, and I could very well be wrong, and real estate could go much higher. Who knows? Especially if median incomes go way up, and or if interest rates go way down. Those two impact prices tremendously. And if prices go up and you own several properties for investment purposes, then you leverage that gain. So that'd be a fantastic place to be. But with blocking institutional money and buying single family homes, that's going to halter how much they're going to be able to go up. But also just the median ability to buy and afford real estate. We need to see more median income wage go up. I'm really curious to see how AI is going to impact median income. A lot of people are losing their jobs to AI. We had jobs reports come out today where there was, not great job data. Which bad job data typically will impact rates to come down, and we're just not seeing, we get the right environment for rates to reduce and to come down, and then for it to not happen, it's like trying to, find a new foothold on what is going to bring rates down. And then, but I would say, the opposite was true last week. interest rates were coming down quite a bit last week, and I couldn't figure that out either. I'll share the screen again to see what I'm looking at here, where this is what rates we're doing here. From the bottom of this right here was at the end of last week, and then this week they just shot way up. And then if I move my head out of the way, you can kind of see, what they've been doing for, let's look at the last month here. They just kind of have like this U shape, but I didn't really know why they were going down as much. So, I mean, who knows? It might have been just like the Fed printing money to buy treasuries. Like that's been like the biggest buyer of those bonds that are bringing the rates down. But whatever it is, I didn't really understand why they were coming down so much. And now that they're going up, when we have a whole bunch of traditional news that would typically make rates go lower, it's just counterintuitive and it's hard to know exactly what's going on. So I'm just sharing the information that resonates with me the most, where they're talking about oil going up, which causes fear of inflation, which is pushing the prices up. I'm just going to run with that, even though I'm a little bit more concerned about the fact that we're no longer looking at the U.S. Treasuries as a risk-off asset, where typically, if I go back here to U.S. markets, typically if we saw stocks sell off as much as we did in the last 2 days, today and yesterday, both days, I want to say the Dow went down about 500 points. We typically see money flow into bonds. Let's see the comment here. Trying to buy a second house and refinance my current house. Should I wait to refinance my current home or do it before buying the second house? Typically, I would refinance first and then buy the second one. And the reason for that is to grab the equity to go towards the purchase of the other. That's typically what I would advise doing there. But if you don't need the equity to buy the other one, then think about it this way. Is your payment going to go up or down when you refinance the first house? If the payment goes down, then that's a benefit. So if you don't need the cash and the payment would go up if you were to consolidate other things, those are the factors to look at. You want to just make sure you're as lendable as possible on that second loan. Britton says, I make $9,000 a month. I have 34,000 saved, but credit score is under 500. Do I even have any options to buy? You do if you have VA entitlement. VA does not require a credit score whatsoever, and we have lenders that will literally go down to a 350 credit score. The other thing to think about is let's assume that you do not have VA entitlement. Then the other way to, so no VA, my score is low from fraud, but it never recovered. So if we can prove the fraud, like the underwriters will want to see something like a police report. So we'd want to document the fraud, and then we would also need to remove, so the investigation of the fraud needs to be completed before we'd be able to close on because that's in question. Like the underwriter is not going to want to make a determination on fraud. So they'll say that that's up to us to prove. So you have a police report, it was complete and removed, but it's low. Okay. So it would be really easy to boost your credit score. The easiest way to boost your credit score is if you have a friend or a family member willing to add you on to one or two of their credit cards, because then let's say they've had a credit card that's been open for years and they add you on to it today. Well, tomorrow you'll have years of good payment history that show up on your credit report. And so I've seen people go from the low 500s to the low 700s in as little as 1 month. Okay. So that's the quickest way to boost your score. A lot of times when people are talking about credit, they typically think the only way to get my score up higher is to atone for the sins of the past. So if I got behind on a credit card or something, that I'd have to deal with that problem, and that's not the way to look at it. The best way to boost a credit score is to add new good credit. And to the worst thing you can do is, if you have an old collection account, is to pay off an old collection account. Because if you haven't bothered with it in the last 3 years and now you make a payment on it, well, guess what you did? You just made it a new current account. And that can sometimes impact your score negatively, even though you're doing a good thing, right? So we want to focus on just, how are we going to be able to tweak the data to make the score do what we want it to do, which is go up. And the best, quickest way I know how to do that is to borrow good credit from somebody else. They'll often ask this question, right? Let's say we went to our friend. I'll oftentimes get this question from the friend, and I'll be happy to jump on a conference call with them. But they typically will say, if my good credit will help them, will their bad credit hurt me? It's a logical question, right? And the answer obviously is no. So the way credit reporting works is it's on a per account basis. So the only way that you could hurt them is if you add them to an account that's negative on your credit report. And you're obviously not doing that. What we're talking about is finding this good credit card and adding you onto the good card, right? So that would be the quickest way to boost your score. And then at that point, you have a lot of options, but typically 500 is the barrier to get over for this situation. Let me go back up to your situation here where you said you have $34,000 saved. All right, so for FHA, from 500 credit score up to a 580 credit score, you would need 10% down payment. So with the $34,000 that you have saved up, that would allow you to buy up to a $340,000 house, right? That would be 10% of that purchase price. If we got you up to a 580, then we could reduce that down to 3.5%, and you'd be able to buy a hell of a lot more property for that amount of down payment. So 34,000, divided by point. Yeah, 971,000. So anyway, Hawa says hello. Thanks for the comment. Thanks for joining. But yeah, Britton, I would definitely just work with you to get the score up, and then you'd buy real estate. We would just figure out a timeline and make it happen. And I appreciate that because a lot of people have question about credit. I don't think I've spent enough time talking about credit, but Hava, go ahead with your questions for sure. But yeah, I certainly have a little bit of advice to give on credit, even though I'm not a credit repair specialist. I've just seen thousands of credit reports, and I know some things that work and some things that don't. But would love to hear your questions. Go ahead and ask. And actually, what I should say, because I see we're coming up to about 10 minutes for me to hop off. As soon as I get to about 10 minutes away from end of the show, I just say last call for comments and questions. So if you have something, feel free to fire away. Otherwise, I'll keep running my mouth and we'll talk about whatever I want to talk about, I guess. But while we wait for Hawa's questions, just again, happy Friday. Hope everybody's had a good week and is heading off into hopefully a fun weekend. I know for me, I have 3 kids left in high school, and this is the start of their spring break already, which feels early, but they're off to do some fun adventures this spring break. I got my boys are flying out to Grandma and Grandpa's out in Arizona. They're going to go do some golf and pickleball and be around some good company. And then my daughter is going to be flying out to New Orleans, and she's in the marching band and she plays the trumpet. So she loves all of that scene. So I'm really looking forward to both of their experiences. So it says, I've saved about 60,000 and make almost 80,000 a year. Scores like 600. So that all sounds good. What I'm going to do, I'm going to pull up just a general calculator for some rough numbers here. And if we take your 80,000 per year of income and divide that to get monthly, and then I divide that by 2 to get just over $3,000 is what we need to keep your total debt under. So at this point, I would ask, between auto loans and credit card debt, how much per month would I find on your credit report that I would have to subtract from this number? And your question is it best to continue to work on my credit? Not necessarily. I mean, if you're looking to buy the house that you're going to live in, you're well qualified to buy a house right now. So the most important factor is finding the house that you want to live in. It's in the right area. It has the right, features or whatever it is about the house that you'll enjoy living in. That would be the primary thing right now, because your situation as described can buy a lot of homes. And I'm not sure where in the country you are, but if you're in an area where the homes are the values where I'm at, see, I do only have a car loan for $29,000. So payment on that. You're in Minnesota. I'm from Minnesota. You might recognize the area code. So glad you're here. And we lend everywhere with our team, but I'm also licensed in Minnesota and Texas, and then I have my team all over the country. But anyway, so $29,000 loan per month. I'm thinking have paying that down to the car loan. I'm wondering what the monthly is on the car loan. Is it just under $1,000, maybe like $800, something like that? Does that sound right? If I subtract out 689, thank you. So then we need to keep your mortgage payment, your complete housing payment under this number of $2,644. And that's a ballpark number, because we would have some flexibility there, especially if we went with a program like FHA. We can actually go up to 57% of your income, which would be, taking more, more payment to approve you for. But maybe you're like, hey, Kenny, I don't want to pay more than $2,644 a month. But it would have to cover your principal, your interest, your taxes, your insurance, your homeowners association, absolutely everything for your housing cost would need to be below that amount. And then the question is, how much house can you buy for that payment? You're likely to be somewhere in like the $350 price range, which definitely gets you into a property in Minnesota. I was most recently in Lino Lakes, Minnesota. I grew up in Wayzata. So these are probably towns that you're familiar with, but not everybody is. It's the Twin City metro area. Actually, I've been in Texas now for almost 6 years, and I know Minnesota and Wisconsin way better than Texas. And people are like, "Oh, you're from Texas? Do you know whatever?" And they like shout out, "Oh, that's right next to this road or that road," and I'm like, I got no idea, but I can tell you a lot more about Bloomington and Burnsville and Apple Valley, all the metro area. But it's definitely been home. As I tell people, I'm 46. I spent my first 40 years in Minnesota. How would down payment work? So you'd need 3% or 3.5% down. You have 60,000 saved. So, I mean, you're well over, qualified for the down payment. Being a first-time home buyer, you'd also qualify for for first-time home buyer programs where you would be able to buy a house with very little money down. But I would not recommend doing that. I would recommend paying the 3 or 3.5% down at least to get a much lower payment on the property, because those down payment assistance programs typically result in a higher payment as a way to offset the fact that they're covering that down payment portion of that, about that 3%. So the way I would recommend doing this, if you screenshot this, text me to the number above and just text me MN so I know it was you. And then I will get you the loan application. I'll get you an actual pre-approval letter as early as today if you have your income documents ready. And then the next step is you take your pre-approval letter, and if you don't already have a really good real estate agent that you're working with, I know a bunch of them in the Twin Cities. I can get you paired up. You do a little home shopping, find a house that you absolutely love. Again, that's the first thing, as far as what next steps are. Find the house that's going to work really well for you. And then if that exists, then everything else is going to fall like dominoes. So I appreciate that. Few minutes left here in the show today, and then I'm going to get on with my Friday night, because it's now 5:30 in the Central Time Zone. And thank you very much. Thank you very much for the comments. You'll be fine. You'll be well qualified. But for those of you that are streaming through, I can price out different loan scenarios right here live on TikTok. I pulled up the pricing here for an FHA purchase here in Texas, where it looks like right now 5.375 rate with about a quarter point in lender costs, which is about $1,000 in lender fees. To get that rate, we can go with a lower rate if we raise cost, or we can go with less cost if we raise the rate, right? Higher rate, lower cost, higher cost, lower rate. Thank you very much for the likes. I always forget to ask for the likes, the follows, the shares, all the buttons, but I appreciate those. If you know anybody that's looking to buy or refinance in the near future, please do share this with them. And thank you so much, Chelsea, for the follow. I think I'm now like 2 follows away from 2,000 followers, and so I don't know. I'm following that, and I get a little thrill out of once you pass another milestone. But I got started doing this since last October. And it's kind of been a fun thing to watch the progression. And I enjoy doing it. I had no idea. I'd never thought I'd be, I've been a loan officer for so long, I never thought I would be doing something on camera. It's still very new to me, but takes a little getting used to. But now that I've been doing it, I'm never going to stop. Like, this is fantastic. So if you know any loan officers, one bit of advice that I'd give them is to get on TikTok, because that's where people are scrolling, right? That's where I'm going to be scrolling later. And then I'm a little bit of an impulse buyer, so who knows what I might buy off of the TikTok shop later today. Especially if I'm last night I missed yesterday because I had allergies really bad, and then I took Benadryl, and that'd be a horrible mindset to be in as I'm falling asleep and making some impulse purchases. So but hope everybody had a great week and is heading off into a very fun weekend. That's the end of my hour, unless anybody has any last final thoughts, comments, questions. Otherwise, I will be back on Monday. I'm kind of telling myself I should make up yesterday's show by doing something on the weekend, but I don't know yet. But for sure, Monday, I'll be back on for an hour. So if you want to get an alert, please do follow. And then I will be back on I do repost these on YouTube in their entirety. I put them on a podcast called Mortgage Talk with Kenny. And if I lower this, you can see the Mortgage Talk banner. But for a follow here on TikTok, it's just Mortgage Talk. At Mortgage Talk is me. So thank you guys so much for being here. Thanks so much for the follows, the likes, the comments, and feel free to snapshot this, text the number above, and I will get you a written quote. But I'll be back on for another hour, at least on Monday, to price out anything you have or answer any questions, mortgage or real estate related. Thank you so much and enjoy your weekend.